This just in as we come on air. Following the dramatic failure of Silicon Valley Bank, the 16th largest bank in the U.S., the government has announced that all depositors at the collapsed bank will have access to their money the first thing on Monday morning. Our Kyung-eun has the latest.
All eyes are on what's next following the collapse of Silicon Valley Bank. Watchers were on high alert for information over the weekend ahead of the market opening on Monday. And on Sunday, the U.S. government announced that all deposits at the tech-heavy lender SVB will be available on Monday. Plus, in a separate measure to strengthen public confidence in the banking system, the Federal Reserve announced it would create a new lending facility for the nation's banks to buttress them against financial risk caused by the SVB crisis. The announcement is some much-needed relief for SVB customers and beyond. Initially, after California regulators shut down SVB on Friday, the Federal Deposit Insurance Corporation stepped in. It announced that insured customers with deposits of up to $250,000 will be able to access their money when all offices and branches of SVB reopen on Monday. But deposits over that amount accounted for 85% of SVB accounts. The announcement came after federal officials spent the weekend scrambling to come up with a measure other than a bailout. Treasury Secretary Janet Yellen on Sunday said a bailout of SVB is not on the table, citing improved resiliency in the U.S. banking system. Yellen's remarks are in line with the White House immediately expressing confidence in the response on Friday when California regulators shut down SVB.
Our banking system is fundamentally different because of the changes that we put in place in 2008. For example, they have to hold more capital. They undergo stress tests. So we know that we had to build more resilience into our banking system, which allows it to withstand these kinds of shocks.
Despite the extended protection of depositors, there are still concerns as the majority of deposits at SVB were not insured, meaning a struggle to meet payroll for firms if their money cannot be recovered. Now the FDIC is seeking a buyer for the stricken bank. If no buyer can be found, the FDIC will sell off SVB's assets in order to repay uninsured depositors. Kyung-eun, Arirang News.